Welcome back. There is, of course, a high degree of uncertainty about what will happen, not just tomorrow on Election Day in America, but on how soon any kind of clear resolution is achieved, either for the presidential race or the senatorial. There are various scenarios, money managers, individual investors, and businesses alike, all trying to factor in what might happen. One business doing that using expert algorithms is Riskthinking. Ron Dembo is its founder. He's with us now. Ron, great to have you with us for this. And I know you have very complex models that you use to help businesses model things like risks around climate change and sustainability. You've applied them here to election scenarios, and it's kind of a fascinating look. And I think what I want to do, with your permission, is talk about the sort of four potential scenarios you see, and then walk through their implications for different parts of the economy. So let's just start with the scenarios you lay out as the likely ones here, or possible ones.
So one of the things that's absolutely certain is that the likelihood of a contested election is really high. I mean, for many reasons. The most recent news is the mail ballot, which involved higher than expected Republican participation. But a Democratic win under that condition will surely lead to a contested solution. So another thing is that the likelihood that polls are wrong are high. You know, it could be that the polls just don't reflect what really is going on there. It's happened before. You know, the polls are inconsistent with the latest news on Republican participation. And finally, what will happen to the markets under any of those regimes is really what we call radically uncertain. So there's no way you can think of probabilities or forecasting it. And we want to get people away from this idea of just trying to forecast. The best you can do is come up with scenarios under each of these regimes and understand what the best and worst cases are, and then make business decisions as to what to do about it.
So I want to pop up the S&P 500, which was obviously one of the metrics that we follow all the time. We've got four scenarios, and just so viewers know what they're looking at here. Red is a Republican sweep, that's regime 1. Blue is a Democrat sweep, that's regime 3. Scenario 3 there, which is the light green, is the disaster scenario, what you say is most likely, where there's no conclusive resolution. And then 4 is legislative deadlock that sort of goes on for some period of time. I mean, it's interesting when we look at this, Ron, for those of us who've been following this, to say, does this suggest, when we look at it, that a Republican sweep is best for the S&P 500? Am I reading that correctly?
It looks like most people feel that if the Republicans were to win, you can see that distribution skewing to the right of the black line where it is today, or where it was when we drew these graphs. But there's something more interesting in this. When you look at a distribution like this, rather than you're looking at some forecast, you see that there are quite a few people who believe that it could drop to as low as 2,000. So even if the Republicans win, most people think there's some people who go up, but it could go down, and go down by a lot. And that's the kind of Brexit scenario where you catch people by surprise. That's the black swan.
Interesting. And then that gets us to U.S. unemployment. And we'll put that in. And again, just a reminder, these are the four regimes. The red and the blue are easy to see. The sort of chaos, organized chaos and less organized chaos, are the two, regime 3 and 4. What are we looking at here? How do you interpret this chart on U.S. unemployment?
So under this contested situation, which everybody seems to think is most likely, unemployment really goes up. As much as something like 16, 17%. And there's very few people who think it'll go down to as low as 6 or 7. But in the event that there's a clean sweep, say, by Trump, you see a different picture where unemployment is more uncertain, it could go up or down. And in the event that you see a Biden clean sweep, it's probably more likely to go up in this, at least from these participants, than down. These are what are called fat-tailed distributions because there's a lot of weight in the extremes. So this is extremely uncertain. You could have unemployment rate going to 15% or down to 5%. And that's a huge reach.
I want to pop in carbon emissions. Joe Biden has made climate change and a shifting view on policy a real central election issue here. There's a spikiness here that we're seeing. What do these distributions suggest about carbon emissions under the various potential outcomes?
Well, they suggest if there's a clean sweep by Trump, not unexpectedly, we could see carbon emissions go up substantially. But, you know, there are many factors that go into carbon emissions, and there were people who believed that even if Trump wins, carbon emissions could go down, although less likely. And under the clean sweep of Biden, you'd see quite fat tails towards, some people, very few, believed it could go up, and most believe it would go down. And then you get this spike under this, where everything's uncertain, carbon emissions go up, pretty much everything falls apart.
And then I want to get to West Texas, price of oil, because this one, to my untrained eye, Ron, this one's a little different. There's a kind of a hugging the curve, regardless of the scenario. What does this suggest here?
I think in West Texas, it's a little more complex. But you've got a big spike under regime 4. But let's look at the ones we were looking at before. Under a Trump regime, you have, West Texas crude going up in price. Because the expectation, I guess, is that we'll see more demand. And under the uncertain regime, the most likely, everything falls apart regime, West Texas is just spread out evenly on either side. It could go up very high or down. There's tremendous uncertainty in that case. That's the way to read the distribution.
I want to hit something. I think you've suggested that when we ask the question, which we do, of course, in recent elections, are the polls wrong? What is the likelihood that the polls have misread this? I think you have a sense of this that's pretty interesting because of what we know about the advanced mail-in ballots. What's your take on the likelihood of the polls being off the mark?
Well, you have two possibilities here. First of all, advanced mail-in ballots show that Republicans are sending stuff in more than Democrats, which is completely unexpected. It could mean two things. It's not consistent with the polls. So it could mean that registered Republicans have switched sides and the polls are wrong, or the polls are wrong themselves. So, what's through all of this is the radical uncertainty. We're entering into something with such uncertainty that there's no way you can forecast what the market will do. Your best bet is to just get your hands around it with a bunch of scenarios.
Ron Dembo, it is great to have you with us. Hopefully we can talk again in near future about some of your modeling on climate change and the risk therein. Ron Dembo is the founder of Riskthinking.AI.